stocks with the Technical Trader at thetechtrader.com. It is Thursday, the 8th of February, and a nasty day on Wall Street indeed. Let's take a look at the charts. Well, from yesterday morning's high, when we were over 6,700, we came down in a 1, 2, 3, 4, 5 wave decline, and the third wave had a 1, 2, 3, 4, 5 wave within the fifth wave, followed by a 3-wave corrective. This is also a 1, 2, 3 wave corrective. So almost a perfect 5-wave decline. Taking this thing from 67.08 or something like that to 63.05. This is 400 points in a day and a half on the NASDAQ 100. Huge drop. The S&P 500 in a 5-wave decline has dropped from 27.28 to 25.80. About 148 points, and that's huge for the S&P 500. We've dropped quite a bit, I think 7 or 8% just in the last few days, and I think we're oversold, no question about it. But can it go lower? Let's look at the hourly charts. Here's your side-by-side S&P 500 and NASDAQ 100. And you can see that after the big run-up, and we told you there was a fifth of a fifth. This was wave 3, 4, and 5. The 5 had a 1, 2, 3, 4, 5 wave up. Look, this is also a nasty spill that's taken us 7,022. I believe that was a high, to 63.06. 716 points straight down. Well, not straight down, but a 1, 2, 3, 4, 5 wave decline. So as far as I'm concerned, even though the oscillators aren't extremely oversold, I mean, yes, we got to over 200, closing at minus 205 today. And we were deeper than that recently. As a matter of fact, in this low here, the oscillator was deeper than this, which means possibly a positive divergence going on. I do think we snap back. We may snap back tomorrow or Monday, but it's difficult to say how far down this goes. If you look at the overall structure in this pattern, I think that this market, or the NASDAQ 100, won't drop, in my opinion, below 62.40.50. And that may happen tomorrow morning. If that happens, we're snapping back, I think. Here's the S&P. S&P's rolled over and plunged. And if we do get a little bit lower, I think there's a possibility we could see this down about 25, 55, 60, maybe another 20, 25 points, but I think it rallies at that point. Let's look at some stocks and some really interesting ETFs. Here's the DWT for oil. Oil's had a major downturn, and some of the oil stocks just have gotten whacked really hard. You can see major trendline breaks. On the opposite side of the coin, the DWT, or the crude oil inverse, linked to the S&P, you can see that this has had a major 1, 2, 3, 4, 5. And this is a 1, 2, 3, 4, 5 waves within the third wave again. Now we've broken back out above that declining top line at the 50 here. But it looks to me like with the volume of the last 5 days that oil may be making a major turn. The targets now are 15 and 18 on the DWT. Looking at the other side also, the SCO, which hasn't really technically broken out, closing right at its declining 50 and right at the declining tops line. This follows through and it closed at 24.10. This might be 26 tomorrow or the next day or so. Ultimately, I think this is a $30 stock or near there, 29.5, 30. And then maybe it pulls back. We'll see. Looking at the ETF for oil shares, triple ETF, look at that run up. 7 to 11 basically in the last week. Now, there's some overhead resistance up here around 12. We may get that as early as tomorrow morning. We'll see. But my target's going to be on a swing trade somewhere 15.5, 16, maybe ultimately up around 18. Let's look for entry opportunities, perhaps down in the, let's call it 10 range, and then we'll see what happens. I'll be watching the oil bear ETFs, including the DWT, ERY, and the SCO as well. The financial ETFs today exploded for 12%. You can see the FAZ, which I've been following for years now. This is the major declining top line. It goes all the way back here. Technically, just technically now. We moved up through it today, but we're at resistance. This low, this high, and this last spike high is right there. If it pops through here, and it might do it tomorrow, 14 would be my day trade target. And ultimately, I wouldn't be shocked to see this make a run at 15 and even 17.5 up here. But again, at some point, you're going to get a little pullback retest. I always like to see the initial thrust on big volume, then I look for the first pullback. With the moving averages curling up and crossing over, may be a good opportunity. Another ETF is TZA on the financial side, the triple small cap. Now that one broke out across this major declining tops line and has run up or may run up into this 15 range short term. We'll see if that happens. My target's 14.5. Ultimately down the road at 18 or 19. And of course, the UVXY with VIX have exploding today. We pretty much nailed the targets on that one today at 20, near 28. And I think, what did it get up to today? 27, 28.05, right at that level we were looking for. And pull back a little bit, not too bad. But you can see that the major declining channel broke, massive volume on the upside, then a pullback, one day, and then right back up again to test this 28 range. We get through here, we might see a run as early as tomorrow into the mid-30s if we do not rally this market. Now, look at the McClellan oscillator. I want you to see this, just so you're clear. The T2106 back down about minus 205. Now, 2 days ago when we hit a higher low, this thing got down to minus 281. So we'll have to see tomorrow where this goes, but if it gets anywhere down to 250, 280 zone, it could be a buy for a market snapback. This is historical. When you see this historically here, this is been around a long time, and this oscillator is very indicative of extreme overbought and oversold, and you know that we haven't seen this reading since back in 2014. That's 4 years. The percentage of stocks above their 40-day moving average dropped all the way down to 12.5 today. How about that? That wasn't today, excuse me, that's a weekly. You can see that it dropped down to 11.97, jumped up to 28, and then right back down to 12 and change. Now, on a historic basis on this, you can see that it hasn't been this low since 2 years ago, but it might very well have to get down towards the single digits and the high single digits, 6 or 7 or something like that before that ends. And that could happen tomorrow as well. And maybe early on. We'll see if it bounces, comes down, then bounces. So the oscillators, lots of the indicators we follow, and some of the ETFs are indicating extreme oversold. I don't know how far we bounce or when we bounce, but we'll have to keep tabs on those ETFs. Now, look at some stocks that did well today. Take a look at Grub. This is a really major deal for them. And this stock has been ripping it ever since it was in the mid-teens 2 years ago. Essentially, it's gone from 18 to 95, excuse me, in the last couple of years. So is this a blow-off or is it a major breakout? Well, today's news was so big and the volume was so huge. I'll keep close tabs on this one, but I think we can get it up towards 100 or 105 or something like that, provided the market cooperates, of course. INFM with a major breakout on potentially on strong news, but it's up against resistance. I wanted you to see that. Across here, should it get out above that, it might test 10. I would look for entry opportunities, and also I would look for this stock to put a hold on right there at today's low. This is a support area. 13 days to cover according to that. IO with a big reversal day, they had a strong report. It came down to support and the trend line and lateral price support, and then exploded with a big engulfing bar. At this point, again, a market cooperating, I think the stock makes it to 30, 28, 30 range, something like that. 13 days to cover on that one. IVC with a big day and a breakout. Looking at this pattern, it appears to me that this makes it up to 20 short term and maybe gets up into the 23.4 zone at some point. But today was important, it was on good volume, and it closed in the upper end of the range with the breakaway day. And on a day like that, to have a stock breakout like that, that's something you want to watch. Always watch relative strength. The strongest stocks in a weak market are the ones that really do well when the market turns. Sohu, Chinese stocks are getting whacked. I'll look at that one a little later. SPXU is another ETF I did not tell you about earlier, but that has run from around 9 to 12 and change, and the major declining top sign and lateral resistance comes in around 13, so look for that to extend potentially tomorrow morning, but then looking for a pullback. And VIRT had a huge day. Looking at this major base that's formed over the last couple of years, you can see that this base broke out with a clean breakaway 2 days ago, had a little bit of an inside day yesterday, and then today was an explosive day. Now, since it's only been public a while, this has made a new all-time high. It might very well make it up towards 30. Near-term target is 29.30 zone, and then we'll see what we can get out of it. Now, look at some boxer shorts. AEIS, massive rollover top. Even though I gave it to you here and ran up to resistance, it did roll over and get slammed down from 78 to 62. My target now has to be somewhere around 57. Even if it does back and fill in here, I think it goes lower. At some point, you can see such a massive top after a big move that this stock could be very vulnerable to lower levels, even as low as in the 40s somewhere. AGX, a Berkshire swing short, that's doing well. That wedge broke. It rolled over from 46 down to 38 and change. My target on this one now is down about there at 35.5. Beyond that, 31. Pretty nasty looking chart. ALB, another Berkshire swing short, broke down from the wedge and broke down from the wedge. So it dropped in the last week and a half from 117, almost 18 to 104. We break this level, we're looking at 96 and 89. BITA is working as well. After collapsing from that wave 2 rally consolidation, it's rolled over almost steadily for 2 weeks now. From 30, just under 40 to under 28, 12-point drop, it's back at support. It may bounce and consolidate, but the target remains 22 and 20. CRL is rolling over finally. As you know, we gave this to you in November here. It didn't really work well because it rallied higher. Then it rolled over, wedged, and got hammered this week. Look at the close today. This was down 244. It closed under support. It's very likely, in my mind, that the next target has to be down around, let's call it 94. Below 94, you're looking at 87, 88. Roll over top, indeed. Epic. Susie, that was a great call last week. That bear flag there in the 60 range, 61 range, has rolled over to 48. This has dropped 12 points, folks, in about a week and a half. Very nice. Where's the downside? Let's take a look. I would probably be covering in here because it looks like a 1, 2, and then a 3, 4, 5. But it's hard to tell overall on this one. HSKA. Well, this has been on my box of shorts list for a while after it broke its head and shoulder top and a bear wedge right there at 87. Then that came down and bear flag for 6 weeks and then really rolled over from like 86 to 60. This is a 26-point drop in a week and a half. And it is at my target here, so we may get a bounce. And DSO finally rolls over. I gave it to you in here as it rallied back and then formed a wedge, but it rallied up to the declining tops line and then rolled over. Today getting smacked for 377 or almost 6%. At this target is 60. Next targets are 54 and 48. And TRI is working, and it's slowly working, but it's working. Left shoulder, head, right shoulder type complex. There's your breakdown. Little snapback. Couldn't get the resistance. Rolled over. Today dropping $1.85 or 4.3%. Immediate target would be a gap fill around 38.5, and beyond that, 35 and 31. Dave & Buster's also working. You can see we gave you this one with that wedge formed. Came down and then had a big rising wedge before really collapsing, forming a bear flag and going lower. Right now, I'm 38.8.5 is my target. Remax did break that bear wedge we showed you last week, and it's right at support. If it gets below here, we're looking at 40 and 38. Nasty looking chart. And there's the Soho chart I was going to show you earlier. This one broke its trend, formed a beautiful bear wedge, and then it got smacked right to support. This may be short-term, a short-term sell or cover, I should say, because I think it may form a fourth wave consolidation, and it may take some time. TTD, trade desk, this top looks pretty much completed. It dropped down right to the neckline of this pattern, and if it goes any lower, we're going to see this about 36. And it might go a lot lower than that. And finally, UCTT, the semiconductor is really getting whacked. Left shoulder head, right shoulder, this is a rounding top or head and shoulder top, and you can see the neckline, which was right there, was taken out today with a smackdown of almost 10%. At this point, these are my targets. I'm looking at 15 and 13.5. Folks, that's the long and short of it. It's not a pretty picture. Let's see if we can get a rally back tomorrow. Good night, everybody.